Welcome to Market Movers, where we identify market moving headlines and discuss ways to either hedge risk or create exposure in affected assets. We have Scott Martin. Hey, Scott.
Hi, Jim.
Okay, so here I'm going to give you four headlines. You can tell me which one's the biggest. States are reopening. Good news from Gilead as far as a potential treatment for the virus. Google earnings, which the market treated as blockbuster, and the ever-present Fed. What's the biggest headline?
Oh, Jim, I think it's all about the COVID treatments and possibly the vaccine from Gilead, because if you look at some of the other three headlines, Jim, those all have been driven by the uncertainty, if you will, with the virus. So if we actually have some visibility with respect to treating the virus and possibly getting it eradicated even, that would be things that would drive those other three headlines and certainly things that would make the market rather happy.
So we're in the middle of tech week and Google's earnings matter. There's no question about that. So if you wanted to exposure to the tech sector, you'd use the NQ, either the minis, the NQ micros, or the quarterly, monthly, or weekly options, or you use the ES or the Russell for broader exposure. Going forward, so is the broader exposure something you'd want to be in because you think there's going to be good news from the virus, or is tech's going to be the leaders now that these 5 or 6 names have become these behemoths that seem like they're almost untouchable?
They are, Jim. They're a big part of the index, certainly in the NQs, and a big part of the ES, especially when you look at the techs like Google, Apple, and Microsoft. And it's one of those scenarios, Jim, where I do believe a rising tide does lift all boats. But as we've talked about on previous market mover segments, you're seeing a lot more oomph in the NASDAQ and the NQs, for example. So as we get this more data on the virus and some of the treatments, as we move further away from, say, this peak virus pandemic area, I believe that's where you're going to see a lot of the performance show up and some of the outperformance show up in, say, the NQ's NASDAQ.
Okay, we heard from the Fed. The Fed basically told us lower for longer. They have no intention of raising rates, which of course is what we thought. We're in unprecedented times right here. We look at the 10-year yield. It still stays. It hovers around 0.6%. It has for a long time. I thought if it was going to make a move close to zero, it may have done that today. Thoughts on that? Thoughts on gold?
Well, a lot of focus has been on equities today and not too much on the bonds, on the ZN, for example, Jim. And if you look at the ZN, I do agree with you. It feels like lower forever is kind of my take from what I'm hearing from the Fed. And the bonds have preempted, the bond rates and the movement in interest rates and price have preempted a lot of these big moves up or down, frankly, in the equity market. So with respect to, let's just say, ZN being relatively quiet, relatively being a good word to use there, I do believe we're still going to see some volatility in bonds going forward. And certainly that is going to be dependent on how some of the treatments go with the virus going forward as well.
Okay, at CME, the 10-year contract's obviously one of the most liquid contracts, futures contracts in the world. They have monthly, quarterly, weekly options, and the ZN, the 10-year futures. To gold real quick, which gold has the GC contract, has the micro, it has monthly and weekly options. Gold seems to be rallying, Scott, but not as much as I would have thought, considering how dovish the Fed and the world's central banks have been. Is that because the dollar's rallying, or what is it?
Yeah, fair call. I think we've seen gold and the dollar, though, rally together at points this year because of, say, some of the panic that's been out on the streets. But the reality of gold is this, Jim. Gold has preempted as well some of these big liquidity injections that we've seen from the Treasury, or, say, some of the help that the Fed has promised. So in my opinion, gold is still viable here, as I do believe there's more stimulus and, say, more liquidity coming. And sometimes gold just tends to move forward ahead of some of those announcements in anticipation of those announcements. And then when they finally come, the move has already been made.
Amen. I just can't. I mean, the fundamental story for gold with all this liquidity to me still seems constructive. I just don't think I can be short. Thank you guys for joining us on Market Movers, where we are helping to make you a better trader.